Hi, welcome to the Employco HR Chat. I'm Rob Wilson, President and CEO of Employco USA, and with me is Jason Eisen, our Vice President of HR. Thanks for joining me, Jason.
Hi, Rob.
So we're the topic on this week's chat is the payroll tax deferral that President Trump signed an executive order in back about a month ago that went into effect September 1st. There's been a lot of issues around it. Do employers do it or not do it? And really, at the end of the day, what is the benefit to your employees? So, Jason, do you want to give a little overview of what the executive order was?
Yeah, so this is a payroll tax deferral, the employees portion of Social Security. So that's 6.2%. So from September 1st through the end of 2020, employees can defer 6.2% of their payroll tax to be repaid at a later date.
And so and that's really the key issue. It's a deferral. So it's not like the PPP program where there's forgiveness involved. It's actually a deferral. So think of it as a loan. So your employees are making 6.2% less now, or having 6.2% less taken out of your check now, but you're going to have that much more, really doubling up in the first quarter of 2021.
Yeah, they might be seeing 12.4% of their pay withheld the first 4 months of 2021 to repay that kind of missed payroll tax holiday, some people are calling it, for 2020.
So the key negative, though, for employers is the way the IRS wrote out in the last couple of weeks, their explanation of it is that the employer is responsible for recollecting or collecting that money in 21. And your big challenge as an employer is your former employees. So either someone quits or is terminated, the IRS has said you have to collect the money from that former employer, or you potentially could be liable. So if you have a former employee and can't collect it, or they tell you, no, I'm not going to pay you back, you could be responsible for that 6.2%.
Yeah, and some of the attorneys that we've been talking to caution employers, it's a good idea if you're in a state that allows it to get something in writing, an agreement with the employee in writing to say, I, Jason Eisenhut, agree to repay my 6.2%, maybe on a final paycheck. But even that's a little bit of a gray area right now, whether or not that's legal and warranted. And what if their final paycheck doesn't have enough to cover the 6.2? The employer would be on the hook for it.
Right, and without that signed agreement with your employee, Jason, you potentially could have, if they said, no, I'm not going to repay you as a former employee, and they file a complaint with the Department of Labor, it's a gray area. They could potentially win.
Yeah, and then obviously that opens up an even bigger can of worms if the Department of Labor is investigating other issues. But yeah, that's, like Rob, like you had mentioned, I think we're advising our clients to stay away from it. It's not forgivable at this point. It's going to have to be repaid. So it's just not a good idea from our standpoint.
And it was fantastic that President Trump took a number of orders, especially on the unemployment side, where Nancy Pelosi wouldn't come to the table on unemployment when the $600 had expired. So he signed an executive order expanding unemployment to $400, which was a good in the middle, except for $100 of that is from the state. So, for example, if you're in Illinois, Pritzker's not doing it, so you get $300 from the federal government, and that's ending fairly soon. So that was really good. I think he had good intentions with this, but as you work out the math as an employer, the payroll tax deferral just doesn't make sense.
Yeah, I totally agree.
So, thanks for joining us, and we'll be back with an HR chat next week. So thanks for joining us.
Thank you.